All right, good morning. It is March 17th. It is hard to believe we are in the the end of the third month of 2025 already. But I got a lot to talk about. I'm gonna go a little extra caffeine this morning. Still coffee talk. It's just super coffee, right? Um, because I need a little extra caffeine. It's like a double caffeine boost. Because it's a big, long show. We got a lot to talk about, and yeah, I'm gonna have a few choice words for State Farm on this one, and I'm gonna have a few choice words for some body shop owners on this episode. So sit back, relax, or don't sit back and relax, whatever you want to do. Sharpen your pencil. This is a long one. All right, it's so long that I decided that we better have. I just started to lay out the agenda so everyone right off the bat knows everything that's going to be in this episode. And you'll be able to break it up by chapters. But fair warning, I'm not covering the things in order as they are on the agenda. So we'll be talking about adjusters are begging their state DOIs to help them out. ADAS legal issues are presenting all new problems across the industry. State Farm in the tinderbox. Missing total loss vehicles. Safelite settles a $31 million fraud case that shops you are to be paying attention to, especially if you allow Safelite to be a part of your claims process, maybe through a DRP or whatever. USAA gets hit with a $114 million bad faith verdict on auto claim. A California shop gets caught up in a fraud bait trap. The Arkansas Attorney General sues Allstate, so I got some things I want to talk to the Arkansas shops about. Tim's doing a good job here in the state, and we need to support him. And everyone's wanting to know how tariffs are going to affect the collision repair industry. Um, so I guess we'll talk about that a little bit. But let's get right into it because um, this one really got me all in my feels. And I really want to talk about it. So farmers and adjusters, and you'll hear me talk about all insurance adjusters, right? Caffeine. Mm. The farmers adjusters are so frustrated that they wrote a letter to the Department of Insurance and to their bosses, and they sent it to the states of Tennessee, Alabama, and Georgia. So the South, our Southern claims force, is in full swing on this one. And I've always told you, no adjuster wakes up every day and says, "I can't wait to go to work to underpay claims and screw shops over out of money and all these things." For the most part, adjusters are good people. It takes a good person to want to do this job because it sure as hell ain't for the money. And everyone hates you. But they're so frustrated on that side of the fence, specifically the ones that have experience. So if you've got over 5 years or so experience in claims, they're very, very angry. So what did they do? Basically, they wrote a letter to the Department of Insurance and said, Farmers Insurance has always been a leader in customer focus, blah, blah, blah. However, the current work environment and conditions deeply contradict these core values. Although we as a group request to remain anonymous out of fear of retribution, we feel we have a duty to report the current working conditions and overall failure of compliant claims management taking place daily. Inadequate staffing and resources have resulted in unachievable expectations imposed on us, and in the best interest of our customers and policyholders, as well as ourselves, who are responsible for servicing their claims, it's critical that these issues be addressed. Um, you've heard me talk over and over lately about, there are these really the KPIs and the ways that adjusters are managed are directly in conflict with good service, right? Like you're supposed to take a claim or a call every 2 minutes, when that means X number of calls per day, and it really doesn't. There's really no reward for you as an adjuster to invest time in a claim, in a consumer, in a phone call, in resolving an issue or any of those, because you're not graded on any of that. So why would you put extra time and energy into handling a claim properly and thoroughly if you're just going to get gigged at the end of the month or the quarter or whatever because you didn't take enough calls, because you were on the phone too long on some others, or whatever those things might be. And then other KPIs that we've tried to impose upon the estimates have people making really bad decisions. at the crux of that is just there's just no training. I can't say a lot of bad training. There's just no training at all, right? When turnover is as rapid as it is, you're just constantly, here's a warm body, you set it in a chair, put a headset on it and go, let's go, right? So they're not getting a good depth anymore. They know they're frustrated. They feel like they don't have time to do their job, but they don't understand, in some cases, all of what they're not doing right, right? Like it doesn't feel good, but you don't know why. And why is that? So what's causing these farmers adjusters to be so frustrated is basically it's a consolidation problem. So it's very similar to what we have going on our side of the fence as well. You've had this rapid and mass consolidation, and that's caused a lot of these larger multi-shop operators, MSOs, MLOs, whatever you want to call them. It's caused a lot of them to have uh, really questionable repairs. When we've said the repairs are getting worse, and the service on that side of the fence is also getting worse as well. So what happened to farmers? Just a little background. They have an increase of claims volume through acquisition, right? They, like some of our MLOs, MSOs, buy more stores and therefore wears thin on the amount of training, support, and oversight they can give various locations. Farmers bought MetLife's subsidiary auto and home business. So that was an increase of claims volume by bringing in new business. And then they laid off about 11% of their workforce. So that was 2,400 people a couple of years ago. So at the same time that they're growing in volume and bringing on this new insurance department, then they cut staff. So we'll do more with less, which seems to be most of corporate America's call to action. In our side of the business, we call it volume. The more cars you fix, the more money you'll make. So it's no, same amount of people. We're just going to fix more cars. We're going to get you more throughput. We're going to do all of these things. And it just turns into catastrophe all the way around. Like it doesn't work in body shops. It doesn't work in insurance companies. It doesn't work for Walmart. It doesn't work for any of these people that think that you can just do more with less, and the more from less will generate more profit. One of the quotes from them is also, the failure to manage claim counts is a significant sign of negligence, which has instilled an environment of heightened tension and stress. That's anger. And our duties and expectations have become completely unmanageable and detached from reality. You got to be miserable when a whole group of people get together and decide to send anonymous letters to the Department of Insurance. Specifically when you make claims in that because of the way that this is staffed and handled, that it's negligence, and therefore that would be bad faith. So just the existence of this reinforces a lot of the things that we talk about regularly, specifically when we're talking about how to deal with insurance companies, adjusters, what you say when you're negotiating a supplement, what you don't say, why sending them a ton of documentation doesn't matter. Folks, they literally don't have time to read the crap you're sending them. So if you're sending them 300 photos and 900 pages of OEM documentation, yeah, they're not looking at it. They just don't have the time. And then when you give them something that they don't have the time to do, it's very similar to you. If I give you a task that you don't have the time to do, that anger and frustration and all of that builds up. Well, you got to take it out somewhere. So who do you take it out on? You take it out typically on the person that has the least ability to fight back. So we always say, you get mad, you go home, you kick the dog, right? In this environment, when things get out of hand, I kick the body shop because they just don't have the ability to fight back to me. There's some things I can't do to a consumer, but I can pretty much do anything I want to a body shop. So when you look at this tension, anger, that will generally just make you go, it doesn't matter. So why do I show up and do a good job every day? Because it doesn't matter. Nobody appreciates me. It's just kind of a snowball effect. But the main thing out of this for you shops is it is very, very important that you learn how humans work and think and feel, and that you know that and you use that daily in how you're trying to get what you need or what your consumer needs taken care of. Because beating somebody over the head with a repair manual or copy and pasting. This is still, you got to stop it, people. You got to stop it, stop it, stop it. You have got to stop copying and pasting OE procedure verbiage and slapping it on your estimate. That's like, you're just asking for a fight right now. If you can't see the world through their eyes after they get so frustrated that they send this letter in, then there's no hope for you. Like I hate to be really, that blunt, but this isn't going to get easier. And if you can't figure out how to deal with human beings, 25, 26 is not going to be a really fun years for you in the body shop business. So as we get to more of that, how some of that uneducation, no support, frustration, stupidity, not because it's chosen ignorance, it's just unknown ignorance. USAA got hit with a $114 million bad faith decision. And it is a snapshot of what's to come. So I tell body shops, you're going to see more litigation on your side that stems out of ADAS. And we got to talk about some of that today as well. But insurers, you're about to see a lot of class action and bad faith suits around auto claims because it's just so ripe for the picking without training. And then I guess promoting people way too early without support and proper training themselves. You have claims adjusters making bad calls and managers supporting those bad calls. And you'll see more of this. So this was $100 million of that verdict is punitive. So it's not compensatory. In other words, it's not based on the actual damages or whatever. It stems from a 2018 rear end accident. So USAA insured the car that was rear ended. So their policyholder had a claim for injuries as the result of being rear ended. And that policyholder was suing the at-fault party, and USAA intervened in the lawsuit and said that they believe that their policyholder, their insured, was now partially responsible for the loss. So that's comparative negligence. If you've watched a couple of shows back, we talked about this resurgence of comparative negligence. Like it was one of these things, like I think it's like measles. We thought we had eradicated it from the planet because of how many lawsuits it caused us to lose, like in the late 90s, early 2000s, and here it is back again. And it's causing huge problems. So originally USAA had said that the other party was at fault completely as they settled through the property damage and did everything. This sound familiar to you guys about total losses? But then they intervened. Now, it doesn't specifically say in the write-up, but I'm going to be led to believe that they were intervening because of possibly an underinsured motorist claim that was going to come back to them for more monies under the policy after they had eradicated the at-fault party's ability to pay. So first step, they stepped in something that was none of their business, right? If you had not asserted some sort of comparative negligence early in the claim, you had settled the physical damages and you'd done all that, why you suddenly jump in the middle of another lawsuit and start trying to say it's your policyholder's fault? That just seems kind of silly, right? Like I'm wondering who in corporate legal signed off on that one, right? And did they even know before it was too late? So now that case got settled. So the customer comes back and now files bad faith against their own carrier. And I would too in that situation. Like, what the heck are you doing? Their original demand was for $20 million to settle. Of course, USAA says no, and now they get hit with $114 million. They're going to appeal this. I mean, we don't know what this will eventually finally settle for. It may be like the John Eagle case. They initially wanted to settle for like $3 million. John Eagle said no. It goes to court. You get this $31 million verdict, and it settles for, I think somewhere in the 10-ish range before it was all said and done, right? USA offered $10,000. Okay, that's just insulting, right? Like they offered $10,000 to settle it. Then days before the trial. So we've gone through, as you could tell, a 2018 loss. We're in 2025. This litigation lasts a long time, right? I've always said there's no such thing as delay, deny, defend. I hate that stupid book. At no point in any of my career did anybody go, we have this tactic called delay, deny, defend, and it's going to get you out of litigation. Just takes a long time. The discovery, the motions, all of those things. Once it gets in process, it has its own slow wheels of justice that don't necessarily have anything to do with any intention. But that's what's sort of alleged in this by this attorney, is that This whole drug out process was basically trying to make it so hard that the consumer or somebody would just give up. But days before we actually got to trial, then they offered to tender the limits of 250K. So I'm assuming that was probably, again, an assumption because it doesn't say it here, the underinsured benefits under the policy because they had gone after the at-fault driver first. I've gone this far. Let's go into court and roll the dice and see what we're going to get, right? The allegation from the plaintiff was that USAA had breached the duty of good faith by trying to shift blame to their own insured. So one of the things we talk about, if you take the adjusters training, so we have a whole series of training that we kind of just said, look, we're going to open claim school again, right? I think body shops need to learn claim school, and then I think there's some people that think they want to become independent adjusters. So you have a duty as an insurance company to always be acting in the best interest of the other party. You have to put the other party's needs, wants, aspirations, everything ahead of your own. That's good faith, right? That's what you have to do. And if at any moment, for any reason, you're not operating from that standpoint, you're trying to put the company first, you're trying to figure out how to save the company money, any of those things, you're now guilty of bad faith, right? Like that's part of this how this works, right? That's why I always say, like, sometimes insurance companies, just by putting their customer in the way of litigation, whether that's small claims court or whatever, just the exposure alone is enough to justify bad faith in a lot of instances. So in court, USAA got even a little dumber. They basically tried to go with the insured's just greedy and wants money defense. That never goes well for a jury when you're a big insurance company and you've got a little individual sitting on the other side of the table. And this guy was rear-ended at 45 miles an hour, so it was a significant impact. That never plays well. It tends to make the jury hate you and think you're a bully, which is probably what led to this large of a verdict. This is what we call nuclear verdicts. You'll hear the rise of, you can go and Google it, the rise of nuclear verdicts and whatever. Basically, the jury punished them for it, and that's what that 100 million of punitive damages was. It just goes to show you in claims. So if you insurance people and your managers, claim managers, your claims VPs, I know you guys are listening because I get little love notes from you that are usually not loving when these shows are over, that it's not a time to be cute. So whether it's right now where you pay the physical damages, you accept full liability, but then you come back on the salvage bill and you try to say that, oh, we think, the customer was 20% at fault, so we're going to deduct 20% of the charges. You can't do that. You can't come back later and say, I'm just going to abandon the car and I'm going to expose my customer to legal action. Because if you have the collision hub contract packages, when the customer signs for your services, then they agree that they're legally responsible. And if we don't get paid, we're suing you, right? So when you do that and you expose your customer to legal action, you're stepping into the middle of what could possibly be a very ugly bad faith suit. Now's not a time to be cute. And as an adjuster, I used to tell my, I don't need you to try to tell me how to get out of the claim or how not to pay enough money. That's not what we're here for. Our job is to find as much money and as much benefit as we possibly can for the customer. And that's the mentality that you have to have, not a mentality of saving money. But it's just not a time to be getting cute in the claims process. Saving money, awesome. That's what, that's why we have adjusters. If we didn't care about it, we just wouldn't have them. We would just let customers submit bills and write checks. But they do have a job and a function. But don't try to be, you're not Perry Mason, right? Like don't try to go overboard figuring out a way not to pay something. And don't try to get all mad at a particular body shop or at a consumer and start taking it personal and think it's your personal vendetta or job to get out of this, not pay this or do whatever. Along the lines of problems and claims, as it keeps going, our friends over at Iron Mountain Collision, this is not a screenshot from the video, but I just took a screenshot of old Kevin there. Our friends over at Iron Mountain Collision posted a video that I got sent this week while I was in Pennsylvania. Doesn't mean it posted this week, so I don't know exactly, but it got sent to me. And Kevin's explaining a total loss that had happened at the shop. The customer had given the insurance company permission to come get the car without settlement being made. and now they can't find the car. So the customer's been waiting weeks, still no offer to settle their car through no fault of their own. They did exactly what the insurance company asked. They moved it out of the body shop to reduce storage and salvage expenses, etc. And now since the insurance company can't find the car, they're not finalizing the settlement. Missing salvage is not new. It is on the rise though. So I think as training has decreased, and then adjuster and vendor care has decreased, more cars are missing. I was talking to a person that is in a salvage unit. They're a manager in a salvage unit for an insurer, and their unit alone has 47 missing cars right now. Where those goes gets kind of interesting, right? Like some of them are it's on the lot, it just didn't get tagged right, and now we can't find it. And if you've ever been to a Copart or an IAA, it seems like, well, just go walk the lot until you find it. But there are hundreds of cars out there, and they're parked in varying different positions. So yeah, we could go walk the lot and find it, but it's not quite as easy as it seems. And if you don't have a physical person on the lot, well, then that gets an issue. Sometimes they get taken to the wrong place. Like, if you have in a particularly larger metro area, there may be 2 holding pens for an IAA or 2 holding pens for a Copart. Those guys have expanded recently in some metro areas lately in anticipation for the increased total loss percentages coming at the end, like right at 2026, 27. So sometimes it's just in wrong situations. Sometimes in my experience investigating this, none of the, so this is where I'm going to make somebody mad. The salvage places don't have their own towing. They did for a while, and that became like a workers' comp liability nightmare. So now they outsource the towing. So these are independent contractors that are running around to your body shop and picking up cars. Sometimes they sell the salvage out from under. Like they go and pick the car up, and then they'll take it somewhere else, and then just kind of hope that nobody ever realizes that it disappeared. So I've done some investigations long ago in my career on catastrophes. I've never had a situation where this has just happened for regular towing, but on catastrophes, we have so many cars towing, and it's a madhouse, right? Like Houston floods, and I've got 50,000 claims in downtown Houston, where some cars were making it across the border. They weren't necessarily making it to the salvage yard. And so very high end, very valuable salvage was being swooped, grabbed, and gone. So we lost cars that way a lot of times. But anyway, so there's some things that we need to think about. This is increasing. You think it's hard to get somebody to put your Happy Meal together when you go to McDonald's. Try finding people to work regularly in some of these other environments. Number one, I understand mitigation. Once the consumer has a duty to reasonably mitigate their damages or mitigate their losses. So it doesn't mean you can leave it at a body shop forever and just let storage continue to accumulate on the vehicle. But you want to do everything you can to encourage the customer to get an ACV offer before the car leaves their, what we would call care, custody, and control, right? So if it's your body, if the customer picks the body shop, that is still somewhat in their control because they've got a relationship with you. But so we want to encourage them to get an ACV offer before it leaves the property, if at all possible. As shops, you need to be documenting these pickups and helping consumers by the documentation that you do on these. So what process do you have when a car's picked up? So besides the tow truck driver coming in there and handing you the check for whatever the fees were, do you have something they sign? Like where the name of the driver and the time that they came and picked that car up? And do you have a sort of a process to approve their loading of the vehicle or whatever? But what do you have that documents the pickup process for total losses? Once a vehicle is picked up, you need to immediately send an email, send that to the customer, carbon copy an insurance company if you have it, that just says the vehicle was picked up today by so-and-so who represented Copart, IAA, whatever that needs to be. And it may be the vehicle was picked up today by Tim, who is a tow truck driver for S&S Towing, who was assigned to pick your vehicle up by Copart. And you can ask, I'll ask the drivers a lot of time, where's it going? particularly large metro markets where there may be multiple locations. I'm like, where are you supposed to take this, right? And that's part of my documentation that I'll put in the email. That way, if the insurer loses the property, and we're going to help them make a case for why the insurer must go ahead and tender a good faith offer of settlement. The more documentation I have, the more I can, like, I always say it's nailing jello to the wall, or, if you're herding cats, you want to push them into a corner. The documentation you send on pickup is very critical. If parts are included, so if there are non-returnable parts, one, you never load those parts. Always let the tow truck driver load them so that there can't be a claim of you damaging the interior. You need to document what parts the tow truck driver took. I have them sign something that says I took these parts, photograph it before it leaves your building, and let it go. I've had several investigations when parts are with the car that the tow truck driver pulls about 4 blocks down the road, calls his buddy who shows up with a truck. They take all of the parts out of the car, put them in the truck, and then they put those parts on eBay. There was an entire division of SIU that was just watching eBay, and those were for customers that reported thefts on Jeep parts or missing parts from body shops, etc. They were just watching those zip codes to see if parts ever popped up. So that's definitely something we want to do. But just keep in mind, missing salvage, like, of all the things, like, how do you lose a car? Don't laugh, body shops. I come out and visit on audits, and you guys can't find certain cars that are on your lot. Or when we do your lot walk, you tell me that there's a car on your lot that you have no idea who it is or why it's there. So those things happen. All right, let's talk about the expansion of ADAS legal issues. If you go to Claims Journal, and you can search out this little article here, and it's expert viewpoints. It's a video more than it is an article. Apologies, but you can download the transcript of the video if you would like to. But it talks about some new emerging fields of investigation for accident reconstructionists. So Larry is an accident reconstructionist through his partner, Jeff Lang Engineering, and they do a lot. I have a few death cases right now, so this was really interesting, me reading through this, because we're getting served some papers, and there's some motions going back and forth. And basically, ADAS and infotainment systems on vehicles have created a whole new section of potential data to research. So in this video, he talks about how airbag modules, like, typically the black box data on a car gives you about 5 seconds of information before impact. And you're looking at speed, angle, deceleration, and what signals went to where, right? But ADAS has given us so much more information when it comes for accident reconstructionists to go pull information off of the vehicle. And so attorneys and law enforcement are now way more aware of potential data, and they're asking for it. So they're getting law enforcement are getting search warrants now to pull data out of vehicle. Attorneys in private tort litigation are getting, serving up motions to be able to get that data and have it read by an expert. But it holds all kinds of stuff. So infotainment systems, if you have a touch navigation system or a voice activated navigation system, whether that's Apple CarPlay or whether that's Android Car or whatever that is, or it's just built into your vehicle. This past week in Pennsylvania, Larry had to drive Miss Daisy around for 3 days. He's got a really cool new Mercedes, and he would talk to it, and he would just say, "Hey, Mercedes, take me to blah blah blah." And I thought that was really cool, because I'm used to saying, "Hey Alexa" or whatever. You just say, "Hey Mercedes," so a little extra value there. But there's so much that those things get. They'll tell you when a door opens. So if you're one of those people where you pull up and you're listening to a song and you turn off the motor, but the song's still playing and the song doesn't stop until you get out of the car, well, the only way it knows that you got out of the car is it's talking to the door sensors. So your infotainment system can be talking to a lot of different systems. Let's say that you have a feature that the radio volume gets gets louder as you go faster, or one of those settings. But just hearing him talk about all of the different things and all of the different sensors and systems that your vehicle's ADAS and infotainment systems are talking to, and what data could be in there and what they're using that data for. And then we're getting served also what's called preservation. So you'll get a motion that says that you have to preserve data, not only on the car, but on phones. So if you have a phone app that's talking to your car, or like Life 360, we're getting served for those that data as well as part of these suits. So it's probably going to slow down salvage disposition a little bit more for insurance companies. But here's what I want you to think about. If these attorneys all over are getting trained on what data the car has that would help them with their lawsuits, that means there are going to be people out there actually getting and reading that data, which then means if it is a car that had been previously involved in a collision that we repaired, and then they want to say that, well, the data is not right, so clearly that data is not right, and it's because this shop didn't do this previously. We may find ourselves more and more involved around ADAS problems that aren't necessarily just pure, we didn't like the repair. Like it could be lots of different things that may involve us now as these experts and these law firms get more in tune or more aware that the car is holding lots more information than it used to. So it's not just about airbag timing anymore. They're really looking at a lot of things. So you have to think about all of the different systems on the car and what those systems are communicating, and who they're communicating with, because that may be a potential ADAS problem. But you can go on claimsjournal.com, you can go on their website, and you can listen to, this guy has 2 presentations about kind of this evolving field of accident reconstruction and what that's going to do legally. So I always listen to these, and I think it's interesting just for me for the tort cases and some of the work that Larry and I do. But it's also very interesting when I think about how as this evolves, it's going to involve collision repairs a whole lot more. So let's take a look at what we got next. Next, the tinderbox. Good Lord, have I loved watching this one evolve, and probably not for the reasons several of you are going to think. So let me give you the short version. There is a media group called the O'Keefe Media Group, and they're fairly known for these guerrilla type investigation journalism type of stuff, where they often fake or lie about who they are and do undercover recording. Now, I don't find that necessarily unethical, right? Like you should, if you say it, you say it. Doesn't matter where you say it or how you say it or whatever, but you say it, you say it. So they had an undercover journalist pose on the app Tinder, and State Farm's Vice President of Innovation, Hayden Kirkpatrick, believed he was going on a date with a particular woman, and that woman recorded their conversations. All right, it's been well played, and I'm gonna make a lot of people mad. So here we go. I don't think Hayden did anything wrong at all, and I think anybody that's in claims or replays anything that he said, there wasn't really anything there, and I get it, right? I get that they made a big deal out of it. I get how cancel culture works, and I get what State Farm did when they eventually terminated him. But I'm gonna walk you through it anyway, because a few people in this industry on our side of the fence that have been posting this video and talking about Hayden and talking about State Farm kind of got no business opening their mouth about it. So we're gonna go through it. So number one, he was on a Tinder date, right? Dudes, you get on a date, you overtalk, you overshare a lot, and good or bad, right? Body shops, you guys get to meetings, whether it's an association or whether it's some sort of like industry thing, like CIC or whatever. Artificial cameras, I love them. Okay, and y'all run your mouths too. The things that I hear you say when you're even in my classes, I know good and well you would never say if you were in front of a customer or you were in front of an adjuster. So you guys do the same thing. Don't give Hayden such a hard time. So first of all, there was this allegation that State Farm orchestrated these rate increases or these cancellations in California. Well, basically what he's saying, if you know, in claims is yeah, we go to the DOI and we ask for these rate increases. It takes a couple of years for a rate increase to go through. Right now, on average, right, property value in California continues to go up. He states in the video that appreciation is about 7% a year. If it takes 2 years to get your rate increase through a DOI, then by the time they hear it, you're going to have 14% or more of property value increases. In this particular area of California, those homes are of extreme value, right? They're built in this certain place. That's why there were so many celebrities that were, hey, my home's affected, etc. That's high value property, right? It has an extreme risk exposure. So he's right. It was a desert. We had all these undergrowth issues, right? You people, and I'm going to say you people, in January, right? When all of this stuff, when this thing first started happening, so before Hayden here was recorded, we had our own president saying the exact same things Hayden was saying, that this part of the state was known to be a fire hazard. It had undergrowth and deforestation issues that needed to be taken care of, and there was no water. So basically, this was bound to happen. So Trump's saying it, and so many of you, and I kept the receipts, right? I got screenshots. So many people who were reposting Trump's statement of what he had said on this, were then vilifying our boy Hayden, right? Like he, in the video, he just basically says, hey, it's a bad area. Now he embellishes a little bit and says these people live there for their ego and whatever. But you know, if you move to a hail-prone area, expect hail on your roof, right? It's bad. State Farm knew it was bad. State Farm had been asking for rate increases. State Farm had been getting told no. And so the first part of last year, not weeks, they didn't just stop insuring these people weeks before the storm or weeks before the fire. In the first part of the year, State Farm said, hey, we got to reduce our risk. We have too much concentrated risk in this area. We've got to reduce our risk. And by X date, you're going to be canceled. They started telling these people early on in cancellation notices that this was happening. So I know we tried to present it as being some sort of like nefarious, just weeks before that the insurance was pulled away. But that's just not true. That there needed to be a rate increase. There was too much exposure in the area. That's great. If you don't want to give us the rate increase, Hayden wasn't wrong. Elected positions, it's really hard to get a rate increase through, specifically in areas where the rates are already high. It's kind of like Louisiana, Florida, California. The rates are already high. And when you go back and say you want a significant rate increase, that doesn't do well with your constituents when it comes time to be voted again. So those are always, they're always touchy subjects, right? So that's great. If you're not going to give us our rate increase, we will take our toys and go home. And insurers have historically pulled out of markets where there is more risk than reward, whether that was leaving the state of Florida, they left the state of New Jersey at some point. That's nothing new, right? He doesn't say anything that's necessarily bad or wrong. Like when an insurer messes up, I'm one of the first ones to go, yeah, that was stupid. But was our boy embellishing because he was on a date a little bit? Yeah, he was hyping it up a little bit. He was carrying on than more than probably what he should have been. But there's just nothing there that's not wrong. I just always find it interesting that our president could say it at the beginning and everybody was like, yeah, we should have had water. Yeah, they should have been taking care of the undergrowth. Yeah, they should know that it's so dry, fires are prone in that area, and that the LA Fire Department or the mayor or whatever should have done more to do whatever. So in those cases, we agree. Our boy Hayden says the same thing, sort of, and everybody jumps on him like he's some sort of villain or whatever. So I don't necessarily have a problem with what Hayden said. It's the same thing that I would guarantee you most insurance people go home and talk about. We have this unregulated risk that is way overexposed when compared to the money. We have more billions in potential payout than we have billions in premium to pay it. We've got to either raise rates or we got to get out. That's good business, right? I tell you people for your DRPs, you're either making money or you're not. And if you're not making money, get out, right? That's how you make a business decision. The other thing that I find, I'm gonna get on State Farm a little bit. He talks about the 2040 workforce, and this got people a little upset. If we're honest, or if the farm's honest, that's not anything new. And I'm gonna keep bringing out this little pamphlet, right? So if we look at the State Farm, this was the 2000 plan. So this was the claims. State Farm 2000 was an initiative that happened, and we got these little flyers that were sent to all of us as employees. And there's little Ed Rust there in the corner or whatever. We made a concerted effort because the company agreed that bias was a problem in all functions of claims. And everyone comes to the table with bias. If you take the negotiation class with me, you're going to hear me say that everybody has a bias. You can't not have a bias. Like, that's just human nature. That's what it is. Everybody has a bias. And so part of our drive in claims was, you want the claims force to mirror or reflect the policyholder base, right? We should look like, act like, sound like, talk like, feel like the people we service. It shouldn't be the other way around, right? Like, there shouldn't be an overarching majority of whatever. If we are going to be empathetic and provide good service, and good service comes from empathy and connection and feeling, then it's very important that when the policyholders look at us, that they see themselves. And so we went through agency initiatives where in certain parts of the country, we were specifically looking for agents with nationality and language experience, because if you're going to come buy insurance, we should speak your language, whether that was Spanish, whether that was Laotian, whether that, whatever that was, Polynesian. That was a drive. I can't be your good neighbor if we're not neighbors, right? That's just the way that works. So saying that there's an initiative to ensure that a workforce matches the potential or the future of the customer base, I know that got twisted a little bit, but I know what he was talking about. And State Farm, you knew what he was talking about too. And it wasn't new. Like, I'm sure somewhere I've still got some sort of email about the agency initiatives under the new agency contract, and where we were recruiting agents versus just, a kind of a legacy. You took over your uncle's book of business or whatever. And I liked that, and it made sense, right? Like, it truly does make sense that if we're going to service customers, and that goes for you too in your body shops, if you're going to service a particular segment of a population, it is very important that you can connect with them and that you see the world in a way that allows you to service them. That's the best. It's not a bad thing when you look like your customers, or when your customers feel like, or they see themselves in you. And so that's not a bad initiative. Like, I don't know why we took that so wrong. I get it. That's where we are today in society. That's my unpopular opinion, right? I don't necessarily disagree. I don't think Hayden did anything all that terribly, horribly wrong. I think he just said what we were all thinking. Now, you shops, I've sat next to you in meetings. I've gone to your body shops. I've gone places, and you talk about your own customers as soon as they leave your front door. You say things about claims adjusters. Like, if I had a hidden camera in this industry and went to events, half the stuff I recorded would be way worse than what old Hayden had done here. So don't be so quick to hit the share button and vilify either State Farm or this gentleman for what they said while they thought they were on a Tinder date. Because a lot of what you people have said when you think you're at the free drink ticket after party bar, after you've had 3 or 4 extra free drink tickets, the things you've said about customers when they walk out the front door, the things that get said to me when people call me and ask me questions about things. If there was hidden cameras and recordings of us going on, we'd probably say some things that our customers would not want to hear, and cancel culture might just run us out of town. if they had a chance to play those videos. So, yeah, I'm not that mad at old Hayden there. I get it. He messed up, right? Don't do it. But I don't think he did anything necessarily super deplorable. So I'm going to take a lot of bad heat over that one. So what did it do, right? After all of that, and the most of what that media group was trying to do was to oppose State Farm's rate increases. And guess what? Well, this week, California approved the rate increase of 22%. So all said and done, what Hayden was saying about risk and exposure and property appreciation values and trying to stay on top of how much I'm going to insure a home for, 1.5 million today. And next year, that's going to be a $2 million home. And so, like, how do I keep up with what the replacement costs? How am I collecting enough premium to keep up with that replacement cost? So California has tentatively approved the 22% rate increase. And then State Farm is asked, I believe, by mid-April to produce all of the data that supports why they want that 22% increase. So that's coming real soon for them. All right, Safelite. Safelite has settled an insurance fraud suit for $31 million. It was alleged that by a former by a former Safelite employee, that the company regularly used subpar products and then created misleading bills to insurance companies. When I hear that, my only thing is that some of you, you let Safelite in your shop, or you send customers to them when they have like a glass claim issue or whatever, because some insurer is telling you that's who regulates or handles our glass claims or whatever. You might want to pay attention to that. So if you've been doing that, did your customer get what you think they got, or did they get what they think they got, or did they get something else but then were billed? So if you read that article, that one's in Repair Driven News. You can go get the details from that. But it basically says that the employees knowingly used parts of lesser quality while billing insurance companies for higher quality parts. Both complaints were filed by the former Safelite product development and strategy manager, so someone that knows kind of the overarching practices of the company. It was a violation of state laws, and in the Illinois complaint, it says together these schemes resulted in tens, if not hundreds of millions of dollars in overcharges to private insurers for claims filed in Illinois alone. So that's one state. Overcharges which have undoubtedly been passed on to the Illinois citizens through increased premiums. So I feel like we got this like whole Doge thing going on right now where I always tell shops, don't worry about what your estimates are. You're not the reason premiums are where they are, or severity is where it's at. It's not your repair estimate on a car. There's all kinds of other things that are affecting it. And then here's just one vendor overcharging for something, part of a claim or part of whatever. And then how many millions of dollars in severity did that add? And then did that contribute to an insurer asking for premium increases since COVID? So a lot there to take in with Safelite. I'm not going to say our friends at Safelite. Like, I got some people I know that work at Safelite and they're good people. But scale, and we're going to go back to where we were with the farmers thing in the beginning. The bigger you get, the harder it is to be accountable, and accountable to each other, and then accountable to people outside of your business. And so Safelite, it's too big of an animal, and you're trying to be too fast with it, and that's leading to huge problems. All right, well, if I'm going to be fair and talk about what's going on, then I need to talk about something that's going on with body shops as well. All right. The California Autobody, the state's Bureau of Auto Repair, so the BAR, as you typically hear it referred to, will occasionally do investigations. Their job is to regulate auto repair, not just collision repair, but that's one of the things that they've got, right? So they will occasionally do these stings. Now, someone can chime in on the notes and tell me a little bit different, but I want to say it was probably 15 or so years ago, they did a huge sting operation and wrapped up a lot of shops in California. A lot of them we knew. Some of them were Fix Auto locations. One of them was a well-known kind of, TV show car guy that then also had a body shop, and got them all on this sting operation. And most of them, to my knowledge, update me, you people in California, you probably know better. All of them got off. It wasn't like it was a kind of, there was a lot of fault in the sting and how it happened. All right, so the bait car's back basically. So the Bureau of Auto Repair gets a car. They put damage on that car, and they go and they all kind of meet and say, this is what was damaged. And then they take that car to a body shop, and they have somebody that drives the car in, asks for an estimate, and tries to get the shop to put stuff on the estimate that is not related. So that may be, hey, can you just throw that dent in? Hey, while I'm in here, and it's not, could you just paint the hood? Could you do whatever? Whatever that scenario is. Well, they allege that this body shop added damage of up to $3,000 to this car that was not related and submitted that damage to an insurance company for payment. Interesting. This happened in May of 2024, but the guy just got arraigned and charged this week. So I always tell you, when the state is investigating something and you first hear from them, like they come by your shop or they send you an email or whatever, and a couple of months go by and you go, okay, well, it must have went away. It takes them forever, sometimes a year or more, before they make a move on anything fraud related or whatever. So just be aware. I think you'll see more of that. Anytime premium increases are part of what is being asked, and I think insurers all over the country right now in every state are looking for premium increases. As consumers feel the angst of that, and inflation, everything's cost of everything is going up. You'll sometimes see DOIs or whatever go, hey, we're gonna make sure that none of this is fraudulent, and you have the insurers go, oh, the cost of fraud is driving the premiums or whatever. So people will get involved. So just be aware. Never charge for anything that isn't related. As a shop, if a customer asks me to write an estimate for something, I can't say no. So we just need to sometimes figure out a way to go customer request, refinish of hood or whatever we want to do that. But just make sure you're protecting yourself. Second part of this, anytime that there is a short pay, or I don't want to say a short pay situation, anytime there's a overage of payment issue, and you're like, when does that happen, Kristen? Well, for instance, the car's at your shop, you've torn it down, you've wrote an estimate, your estimate's $9,000, they only want to pay $6,000, and then they tell you they're going to come and pick it up, pay your charges, and then take it somewhere else to fix it. So by the time they come and pay you $1,500 or whatever and tear down to pick it up and take it somewhere else, and then they will typically do a supplement with whoever they go to, because they never, they always say, well, this shop has agreed they're going to do it for that. Yeah, that never works. There's always a supplement. They've paid more to fix that car than they would have paid if they'd have just left it where you are. Those are claim overages, and those need to be reported. So anytime that an insurance company is spending more money than they should just to get their way or make a point, that's a DOI complaint. Like, those things need to be reported so that it's not always just seen as you as the ones that are spending too much money or costing too much money on claims. So make sure that you follow through with those every time something like that happens, so that whoever is at that state's Department of Insurance has something to look back on and go, oh yeah, hey, I remember that. This insurance company paid $5,000 more than they should have, because they wanted to take it to another shop. All right, well, good news here in Arkansas. So all of my Arkansas shops, your ears better perk up a little bit on this one. So we've seen Texas go after an OE. We've seen Texas go after an insurer. So everybody's been going after Allstate lately. I think New York just went after Allstate again as well, over data information and sharing. And so in this, the Attorney General here in the state of Arkansas, so Tim Griffin, has filed suit against General Motors, basically saying that General Motors captures data, sells that data to a third party, and then that third party in turn sells that data to an insurance company, and that there was no right to sell that information. I'm just hoping, so for all of my Arkansas folks, I sent Tim a little email that says, you know what, now would be a good time to look at CCC. So all of the rest of you in Arkansas, probably a good time for you to send an email to Tim as well, because basically he's saying it's the third party or the second set of third parties' use of the data that's the problem. For us, that would be Carfax. So if you're CCC and you go, we don't sell data to Carfax directly, but Carfax still gets that data, right? Because all of you have a story of a car that you didn't even lock the estimate, that you didn't look up parts, you didn't do anything on, but then it ends up getting reported to Carfax as it's a vehicle that's had damage. So you can't say it came from a parts department or an OE when a parts order was placed or any other third party. So just take this opportunity for my Arkansas guys to shoot Tim in his office a little message if you want to, and just say, hey, here's a potential other issue that's affecting consumers in a sort of negative way, right? So just take advantage of that. That's just me, I won't get on that soapbox again. Okay, I've been asked and I've been tagged in a bunch of posts on Collision Repair Technicians United and other things about what role do I think tariffs are going to play on our collision repair industry. Full disclosure, I don't know anything about tariffs, right? Like there's a level or a limit to the things I know. I am not an economist. I am not anywhere remotely qualified at all to speak on tariffs and their effect on the economy or their effect on our industry. But so Ryan Mandel from Mitchell did a little video interview recently here discussing what tariffs were going to do or potentially do to collision repair or other products in the insurance industry. That's on Claims Journal too. You can go look it up and you can listen to him. Just a few excerpts from it. The tariffs on materials, steel and aluminum. Ryan says that he believes for steel parts, you'll see a part price increase per part of around $93. And for aluminum, you'll see a part price increase somewhere around $72 per part. For import tariffs, so he talks about Mexico, Canada, and other places. I believe he says the Mexico and the Canadian tariffs are on hold. Whether they'll get reinstated or done or not, we don't know. But on the other tariffs, the parts that we are importing, you will see approximately a $90 part increase on those. So over the course of a lot of claims, that's going to be a lot of money, right? So that'll add up, and we'll have to see how it goes. But I don't know enough about. Everybody keeps tagging me. Please stop tagging me because I'm not going to comment because know what box you're in and know where you should stay and know where you shouldn't go. And economy is one of those things that I know that I don't know. So you can go watch this video and listen to him. I think it's about 5 minutes long, him talking about tariffs and what's going on with the economy. But I thought I would share that with you since everybody's been asking so much. So basically, parts are going to get more expensive. That's how it's going to affect it. It'll increase totals. So we may march toward that $47 total loss rate a little bit faster than we thought we were, or I'm sorry, 47% total loss rate a little bit faster than we thought we were going to get there. But we'll have to see the long term of that and how that affects more than just vehicle sales. And so I know a lot of you are wondering about that. And then poof, there they were. Mitchell had a presentation for it. And so anytime I can promote any estimating system that's not CCC, well, I'm going to take an opportunity to do that. So it's a great thing about having your own show. You can do whatever you want to do, right? It's like having your own body shop. You can do whatever you want to do. You have no one to answer to other than yourself and your checkbook. So those things. All right. Well, that's it for Coffee Talk. It's been a long one. Thank you for hanging in with us over a lot of things. There are things that I did not get to include in this morning's episode because they're too big of topics. And so I'm going to have some spin-off special editions of Coffee Talk. Look for that again on Thursday. So sort of kind of like we did the special edition around the Aztec thing. I've got another special edition coming up on a few different topics that are really cool, but I just need more time to cover them. So look for that later on in the week. And if you have any questions, comments, concerns, well, you can always shoot those to Melanie. Like I tell everyone, she is the smartest person in the entire company. So it's just melanie@collisionhub.com. If there's a topic you want us to cover, if you don't just, got anything you want us to talk about, we'll send that in too. I'll see you next Monday morning on Coffee Talk, and I'm hoping to have a new coffee mug, so I'm making some altercations to it, and you'll get to see the next funny coffee mug. So see you then, guys. Bye.